Hi, this is Randy Finney with the Right Side of the Chart, and this is a closing market wrap for Wednesday, July 27th, 2022. It is 4:03 p.m. Eastern Time, so market's now closed. This is we're just starting out here with a 5-minute chart. There's really not much more for me to add on the daily or the 60-minute chart. Big candle today. QQQ was up as much as we were up over 4%. Looks like about 4.5% at the highs today. Rallied right into that previous high. Great day for an active trader. So we know which way it went. I cautioned you. Let's just take a look at that. You can obviously, if you're watching this video, you probably saw my earlier one. So this is a 5-minute chart. Let me turn this after hours. I can do it over here on another thing. Let me turn that. The after hours off makes that wonky white candle go away. So 2 p.m. right here, you can see on the chart the time scale down below. There's 2 p.m. right here, this line. So there's the Fed meeting, and you zoom in nice and tight. Here you can even do it on a 1-minute chart and see there's 2 p.m. So there was you had a quick knee-jerk up, a bigger down. Like I said, the initial reactions usually faded, and then the subsequent reactions often even then faded. It's just post FOMC noise. It's like market's usually like a chicken with its head cut off, running around not knowing which way to go. But as far as day trading, after the 2 p.m. meeting, the announcement, the meeting lasts for 2 days. It's the conclusions at 2 p.m. and that's when they make the announcement. It was right there. You went back and forth, and we had set up in this trading range, pre and post Fed. This is pre-Fed, leading up to the meeting, and then right there was post-Fed, and there was a breakout candle. So that was a great buy entry for an active trader, where you can see there's these are 5-minute candles. So 5, 10, 15, 20, 30, 35, 40, 45 minutes later, after enough knee-jerk reactions, consolidation, boom, you had the breakout, and it never looked back. And again, Powell also comes on after the 2 p.m. announcement, does his little dog and pony show with the media, and at that point, my analogy earlier, at least this is the market's interpretation, at least it looks this way today, and I'll show you some other things that support that view, is that my scorpion the frog analogy really should have been the scorpion and the hawk. Hawk is a metaphor for one who is prone to raise rates, wants higher rates. And, if the Fed is hawkish or Powell is a hawk, then that means he wants rate to go up. Now he donned the Hawks outfit, if you will, because he had no other choice. He ate a whole plate full of crow, dismissing inflation, and so he had to talk in the hawkish talk. Anyway, so the whole analogy is he is the scorpion, like I said, and instead of crossing the river on a frog's back, he was crossing it on a hawk's back, and he pretty much stung the hawk today and killed it. In other words, he kind of quelled the market's worry about, certainly we know now that you didn't get that 1% hike, which was still by some on the table, and obviously they didn't hike a percentage point. And, by the market rallying, that just shows that they really don't fear the Fed. So either way, from that breakout alone, there was still another almost 1.75% to be made. But look where that rally went into. This was a great day trade fade of the close, right into the previous reaction high. That's always resistance. Traders look at these pivots. The Qs were up 4.5% at that point in a single day. That's about as much as you ever see them go up. And then we had negative divergence here on the 5-minute chart. And the thing is, remember I said it, the Fed we're only halfway through hump week, and this is hump day of a big major week. So we've got a couple of things out of the way, but we've got Meta on deck tonight, like I said. I think it was Qualcomm, couple the big semis. You got Intel tomorrow. You have Amazon and Apple tomorrow. So there'll be some profit taken when you see a 4% rally. So there's the fade, and these are just pullback targets. 306.61. Potentially, we'll see where it goes. Where Meta goes today will determine the rest of this, whether we're going to go all the way back down here or not. But look, at the end of the day, this was a big green candle, and again, you have a lot of uncertainty between now and tomorrow. I remember last quarter, it was not the reactions after the FAANGs reported were not in unison. In other words, some of them rallied hard right after earnings, and others went down hard. So even though the FAANGs tend to move together because they're all top-weighted components of the S&P 500 and Nasdaq 100, so over time their charts tend to mirror each other. The major trends always do. But they do have different business models, and there's a lot going on right now. So again, take that for what it's worth. This market's going to go one way or the other, and we're going to see probably some other big moves. It could be to the downside or upside in the next day or two. But where am I going with all that? Well, I've warned of that. That's just part of earnings season and a Fed day, and you can see volatility cuts both ways. Today was up volatility after the Fed. But there's that reaction high we ran into. Look right here, previous reaction high. And so that's a level that now needs to get popped. So depending on what Facebook, Qualcomm, Apple, Amazon, and Intel do over the next 24 hours, because we've got the first two reporting shortly here, probably as I'm doing the video, they'll come out. And then Apple and Amazon and Intel tomorrow. So as of now, all I'm trying to say, it's another checkbox. The Fed has showed their hand, if you will, and they're taking the less aggressive route, a lot less than was priced in just a week or so ago, with that 1% hike baked in the cake, which, like I said, that probably wasn't going to happen, and it hasn't happened. And so, if you want additional evidence that regardless of what Powell said or does, that the market viewed it as dovish, is the rally, the big spike. Here's the euro. Here, let's break it down to a 1-minute chart. 2 p.m. announcement right there. There's the post FOMC noise. People not knowing which way to go, up, down, left, right. Initially sold off the euro, means the dollar rallied, but then boom, big recovery. So big move up in the euro today, and post-Fed. And again, it's not random stuff. This is all kind of priced in. It goes together. The technicals and the fundamentals so often align. And you can see on this 60-minute chart, you had a little divergent low at that spike low that took out the previous lows. But you still have to take out the top of this trading range right here, and to open the door to my next target. Remember, we already hit this first target right here. That was my first target zone. But here, I'm trying to give me a box tool here. So we need to really take out the top of that range. I think we will, and if we do, that's bullish for gold, silver, platinum, palladium, particularly the platinum, palladium, gold, silver. Those are the ones that I'm favoring, and you have the targets there. So not much more to add than that. Let's just go. You know what? Let's just do this. We'll keep it short, and I'll just go over the FAANGs for you real quick. Okay. We'll start here on a daily chart. Here's Apple, yet to report. They're tomorrow night. Again, one of the many reasons, but a big one why I recently pivoted at the lows is you had so many beautiful, constructive, i.e. bullish charts on the market leaders, and relative outperformance to the market, meaning they were going up, down less, or up more than the market. That's relative outperformance. You had a breakout, bullish falling wedge pattern breakout, and Apple has not looked back. Now, it's getting a little stretched. PPO starting to roll down a little bit. You've got the 200-day simple here, but it's right there, the blue line. I don't know if you can see it. It's right there. But here's what I'd also look at, and this is a potential target for Apple. Remember, this was, to me, big sell signal back here. Reason to be short, stay short, add to shorts. When we broke that down, the uptrend line right there. So there's a potential target. The uptrend line, there's an old support level I had there at 167.55. Yeah, still not crazy about it. Could still come into play. I'm going to lower it a bit. I'm just tweaking it because it was, there it is. I think I like it better, about 166.80. So there's your potential upside for Apple, about another 5.6%. And then I would be more interested in getting short Apple and or the markets at that time if that's it. There's a potential uptrend line. Could go the other way. Don't get married to any one bias or view that you have that the stock market must do this or Apple must do that. Just take it one day at a time, react to the charts. We'll have an idea on Friday, a decent idea. Don't, again, just like you don't overreact to the initial reaction on the Fed today at 2 p.m., don't overreact to the initial reaction on Apple tomorrow after the market closes. It may or may not be the lasting reaction. All right, so anyway, there's potential upside. It meshes with my more upside in the market view. Microsoft, beautiful little chart here. I know it's busy. It was a bearish chart here. There was a lot of reasons to be short. Big divergent high, sell signal 1, trading range, breakdown of that trading range, and the primary uptrend line that goes way back. Major trend line break. I mean, there was just so much overwhelming evidence to be short, and we were. I was unwavering. Bear, shorting at all those breakdowns, posting shorts back to bounce back to resistance, and then also looking at these divergent lows and recognizing those as well for counter. That was the first big counter trend bounce, and I know this is a busy chart, but you can see the lines there. You had a bullish falling wedge back then at the time, and in a bear market, like I always said, they're tradable, but they just in a bull market, a bullish falling wedge, especially on the daily, is the catalyst for the move to new highs and beyond. In a bear market, it's the catalyst for a bear market rally, just like you have at this point in time, and as highlighted, just like Apple, you had the next bearish falling wedge and confirmed with positive divergence. Broke out, back tested. If you missed the breakout, you had an opportunity to buy the back test, bouncing on this 243 support, but here's a level to watch now. Let's box that in. So Microsoft needs to take out that 270 level. That was big. It is big resistance. If it pops it, boom, we're going to go up. There's the 200-day exponential moving average. There's the 200-day simple, and I might as well now see if we can put a similar line that I gave you on SPY and QQQ, the primary trend line, right there. So we're getting close, guys. We're a good halfway through the rally. I was saying that back here, reversal could be about a 20% rally. We're halfway there, so kind of in no man's land. I mean, if you bought back here, great. You have gains, embedded gains. You can add on a breakout. If you don't have a position, well, yeah, you could break out and try to milk that next 5, 8, 10%. Who knows? The thing is, I gave you my views. I think we're in a bear market. I think it's a bear market rally. We could pop that, and who knows? Anything's possible. Go to new highs. So, to say that that's not possible, then you're just not being, well, you don't recognize the fact that just about anything is possible in the financial markets. There's nothing written in stone that we must go into recession or must have hit my, final downside targets before going to new highs. That's just not the case. We'll take the charts as they come. All right, let's wrap it up with the rest. Amazon. Again, Amazon, like so many, I mean, it was just, the writing was all over the wall. Big negative divergences at the high. Then the multi-year or year-long plus trading range broken, dropped. Biggest drop in Amazon in years, bear market, etc., etc., etc. We all know what happened. Set up here with positive divergence. That was highlighted then. It was highlighted as a long entry here at that low. That was when my weekly long-term target was hit right there of 103.31, big time target. And then again on that subsequent test of the 101.45 level, then it was posted as an exit here in the after hour session right at the highs, which actually hit that bounce target of 130.51 in the after hours, not shown here, and then recycled back in as posted again as a new long entry here, and there we are. And it's kind of this W-ish bottom pattern right here. You got 1, 2, 3. And you had some support there at 115.70. But again, positive divergence at those lows tells me this stock is likely to carry up maybe as high as 135.34. And if we can really get some juice here, because the bears are on the run right now, we can come up for a back test of that primary trend line. And that still gives you, assuming that's hit, that could be another 22 or so percent. Again, trend lines are dynamic. They come in at higher and higher prices every day, so you have to kind of project if and when we get there, and maybe you get all the way back here. Let's say that would be in 2 months from now. That would be a 25% gain right there. And if not, things start, depending on how Apple and Amazon report, maybe these divergences just get petered out and we keep going. Long term, we've done some damage on the charts. We're in a bear market. We're below this primary bull market. Both of these. This is my primary bull market trend line for Amazon since the stock came public back in 1997. You can see we're below that. So I still maintain, as of now, this is a bear market rally. Maybe we backtest the trend line because we never did backtest that primary trend line. That's the one I just showed you on the daily. And then go on to hit a much deeper downside target. Complete heresy among bulls in general. I don't think you'll find an analyst in the world calling that. And that was a target I laid out months back when we were way up here, $83. That if hit, it's going to mean that Amazon, one of the world's largest companies, dropped in over in half, 56% drop off the highs. So we'll see. But again, I'm not going to hold out short the whole time and ride out 20, 30, 40% counter trend bear market rallies. I'll swing it down, and if that does go down 50% and I were to be trading just this stock alone, I'd probably make 200-300% of my money if successful and calling it right and catching, being short on the downtrends and then using the 60-minute daily charts to game the counter trend bounces like I have so far. And then when it's time to get short for the next leg down, if it tells me to, or when it tells me to, I'll be short. And again, to be long or to be bullish Amazon is to be bullish the market with very few exceptions. So I'll use these big fangs to either align or refute, or if it contradicts my analysis with the broad market, then maybe take a step back and see if I'm missing something or just kind of disengage. I don't have to trade the indexes at any one time if there's a lot of mixed signals. Tesla still going a lot lower over time, but in the near term, it broke above this little basing pattern, could carry up a little higher. Let's look at Alphabet. There's Alphabet, kind of grinding around, had a big up after the earnings last night. And why are my lines not populating? I'm not sure here. Does that board have them? Oh, there they are. I just don't have many right here. It's kind of a big, sloppy, choppy range. It's certainly tradable. You buy the lows of the range, you sell the highs, and if it breaks to the upside, then that's bullish, and it's probably going to carry us up here. I don't know what. Oh, because the reverse split. That's right. TC 2000. These lines are way up there. I don't know when they're going to get with the times. I pay a pretty penny for this service, but they're a little bit antiquated in that compared to other charting platforms. They don't not make any adjustments to your existing lines, so then you have to replicate all your horizontal and horizontal support and resistance levels and uptrend lines. So that's it, bouncing around that range. There's the 200 exponential, 200 simple right there, but pretty big resistance if it gets up to that 125.64. So this is what I'm watching for. If in a perfect world, if things go where I think they might, get Amazon, Apple, Alphabet all up to those levels there around the same time, and be closing out swing longs that I have, and in the long-term accounts as well, IRAs and everything, and putting on swing shorts in those accounts. And if we never get there, fine. Maybe hopefully I'll be closing those longs out sooner then, and recognizing that we're not going to get there. And that's why I do these videos every day. So here's Meta. Let me turn on the after hours, see if we have any movement there yet. Include post market. Nope, nothing yet. All right. At least no movement. A little bit on the 1 minute chart. Maybe they did report. Maybe it's kind of a non-event. This is a 1 minute chart right now. They dropped initially. See, look, there's an example. Don't read too much in the initial drop. Let's just see from where they closed. So far, somebody bought that stock or sold it 6.6% above where it closed today, and then it turned around and rallied 6.3% so far, almost back to where it was. So these are the ones that have their stops blown out if they were long or figured it was going to keep dropping and they shorted, and we'll see. So far back to about where we started on Meta. And again, a constructive chart right here. I highlighted this several times recently, and it's also like everything else. Bullish falling wedge pattern, positive divergence down below, breakout. If you miss the breakout, you had another chance on the back test. And targets 243, 224, and potentially up here to 245.60 or so right there. Nvidia moving slightly. I might not have reported yet. There's hardly any movement in after hours about where we closed. So that's it. There's I've been bullish, although I booked some profits when I did on the indexes recently, and then recycled back in on the semis right here. That was where when my QQQ hit my target. So there was a nice pullback in the semis, tradable pullback, and then nice opportunity to recycle back in yesterday. So there's Nvidia, bullish falling wedge breakout, initial leg up, pullback. If it can break the recent highs, it should carry up here. I'll give you one more level. You got a reaction high there at 196 and change, about 196.60, and then my max bounce target 209. All right, let's wrap it up here, get the video out to you guys. And again, the takeaway today is, continues, overall, when you see a, 4.5% update in the Nasdaq 100, that especially after the FOMC announcement, that's another check mark for the bulls right now. This has been Randy Finney with Right Side of the Chart. Have a great day.